Hey guys, welcome back to the channel. If you're thinking about day trading and wondering whether Robinhood is a good platform for it, this video is for you. Let's break it down. So, is Robinhood good for day trading? Well, yes and no. Let's start with the good stuff first. Robinhood has a clean and beginner-friendly interface, making it easy to buy and sell stocks quickly. It offers basic trading tools like stop losses and limit orders, which are helpful if you're managing quick trades throughout the day. And of course, zero commission trading means you're not losing money every time you enter or exit a position. Sounds solid, right? But here's the catch. Robinhood doesn't have the advanced tools that serious day traders usually rely on. There's limited market research, no advanced charting, and real-time execution can lag, which is a big deal when every second counts. Also, if you don't have $25,000 in your account, you'll be hit with the PDT rule, pattern day trading rule, which limits how many day trades you can make in a 5-day period. That can totally mess up your strategy. And here's something else to consider. Robinhood has no direct customer support line. So if you ever get locked out of your account or something goes wrong mid-trade, good luck getting help fast. That's a huge red flag if you're trading with real money. So what's the verdict? If you're a beginner, maybe just learning the ropes, Robinhood might be okay for light day trading, like buying today and selling tomorrow. But if you're looking to get serious, platforms like TD Ameritrade's Thinkorswim, Webull, or TradeStation offer better tools, faster execution, and reliable customer support. Bottom line, Robinhood is great for casual investing or swing trading, but if you want to day trade seriously and safely, look elsewhere. That's it for this one, guys. If you found this video helpful, make sure to drop a like, subscribe for more trading tips, and let me know in the comments what platform you prefer for day trading. Thanks for watching. See you in the next one.